So hello guys, welcome back to my YouTube channel. It's LTFs here and I'm back with another video. So in today's video I will talk about how to establish your higher time frame directional bias and trade along with it. And I'll actually talk about a trade that I caught during the first, I believe it was the first week of July. And it was a trade that I started from the higher time frame. All the analysis actually stemmed from the higher time frame, such as the monthly. It was executed on the was executed on the second time frame, but for the sake of this video I will only talk about all the way to 1 minute. So it's very important to establish the higher time frame directional bias, because that actually gives us a context as why we're taking those trades, because the higher time frame will always trump the lower time frames. All right, so let's just quickly start on USD-Swiss franc, which was the trade that I caught, and let's just start quickly from the monthly time frame. So if we look at what's going on the monthly time frame, we can see that the structure overall is absolutely bearish. We can look at, if we look left, we can see that we had this break of structure right here. So this actually was the break of structure. Price came back to mitigate the point of interest, that the order blocks that were responsible for the break of this previous low. So we can say that, okay, that was the break and this right here was the mitigation. So I'll just write mitigation right here. So this was the mitigation. Then what happened is that we had the second break of structure right here. So we can see the bearish order flow right there, absolutely clean. So we can claim that, okay, this whole area right here from this buy to sell wick, which was pretty much the decisional, right? Because it also has imbalances sitting above, right? So we can say that, okay, this zone right here, this whole zone, this was the break, price came back, mitigation, and then we expect to see price continue all the way down to take out these lows right here, right? But for the sake of this trade, what I actually did is that I was mainly looking at this price action right here, this order flow, right? Because once price came to the POI, we had this break, mitigation, second break, and then price came back to this second order block. And then our expectation was to see price taking out this previous low right here. So by the time price actually, when I took the trade, price actually hadn't broken below this previous low, as you guys can see here. So if I drop down, for example, to the daily time frame, we can see that the monthly low actually is this one right here. This is that monthly previous low that we wanted to take all the way down, right? So what happened is that once price came to this daily point of interest, as we know, once price comes to my daily, I like to wait for price to hit the once price hits the daily point of interest, we drop down to 4-hour time frame. We want to see that shift in market structure right there. And it's very risky for price to come to your daily and you drop down to lower time frames. And I understand some people just can't wait to trade, can't wait to catch a winner. But when you have a daily POI, usually the range is huge. And there will be a lot of false breaks on that POIs, and especially because the range is huge, so there is a lot of room for price to breathe. So once price comes to your daily point of interest, I recommend always waiting for 4-hour change of character. So if you drop down, for example, to 4-hour change of 4-hour time frame, we can see clearly that once price came here, if we look at the swing structure, we had this previous structure high, we had this low, price then made this high. What happened? We have this demand zone right here. So this order block was responsible for finally taking out this previous high. What happens? Price comes into the demand zone. It respects, but it pushes up, it fails to create a high. So this was the first sign, right, of price actually struggling to go above. So bullish sentiment here is in depletion. Then it comes back again into the demand zone. Then it tries to attempt, but now it's failing even to break this high. Then finally the bear step into the market right here with this huge push to the downside. So right there, that's when our change of character was solidified. We had the break, price came back, mitigated, respected the supply zone, and gave a second break of structure. We can see that then price came back to the supply zone and broke structure again. We have the third break right here. And then price came to this point of interest. So this first reaction, I actually had a trade right here. That's the trade that I actually did a breakdown on. So I actually put the link right here because this was a trade that was the first attempt when price came here I had a trade that was all the way to 1 to 90, right? I wanted to see if we could sell from here all the way down to the monthly low. So, but price ended up coming back, took me out. But this was actually a 1 to 90. So I actually linked the video right here for you guys to watch. Very good video. So price then came back again and finally took out this previous low right here. So once I saw this break right here on the 4 hour, I dropped down to 1 hour because I wanted to see that there was a supply zone. This was the decisional last buy before the sell, right? Because if you look here, we have this buy to sell wick right here. So this basically means that on the lower time frame, we have some sort of last buy before the sell, because this was the decisional buy before the sell that finally took out this previous 4 hour low right there. Okay, so once price came into that hourly, this hourly supply zone, what I did, I dropped down to 20 minutes time frame. So on the 20 minutes, we can see that once price came into the POI, price actually failed to close above this previous high. As we know, that's the bullish sentiment in the market in depletion. So then price actually came aggressively and broke. So when I came to the charts, actually I was looking at it from the 30 minutes time frame first. So I saw on the 30-minute, price failed to close below with a body right here. So what I wanted to do is say, okay, if price actually pulls back, maybe I can find an opportunity on the lower time frame so we can ride the body closure below this previous 30-minute low, and then we target that monthly previous low, right? So that was the main idea behind the trade that I took right here. So we had the price actually failing to close above right here into a supply zone. So this was a good confirmation, liquidation of this previous high, bullish sentiment in the market in depletion, sellers stepping into the market, creating this strong break to the downside. So we want to take out that low and continue the bearish order flow, right? So what I did is I dropped down, once I was on the, right here, once I saw the price failed to take out this previous low and started to pull back, I said, okay, I'm going to drop to 1 minute or 3 minutes time frame and now look for my setup, right? So I can sell all the way down. So what I did is I came to the charts on the 1 minute. Price was already reacting at this supply zone. So I missed this initial reaction, but I said, okay, I can still catch the trade. If the order flow is still clear, I can still take the trade, right? So what I did is I was looking at the price action. We can clearly see, I mean, the candles are too tight together right here, but we can see that, okay, we had this first break of structure, then price came back basically to mitigate that first break. It came to the extreme right here, even took this previous high liquidity, right? But it didn't close above, so that was good. Then we had this second break right here. So we can see the bearish order flow kicking in at this particular point. So this was the boss. So what happened is that once price was here, I said, okay, I want to see that order flow again right here. So what I saw was this break of structure, mitigation, this second break of structure. So this was the point of interest that I chose right here. And then this was my entry right here. So my entry was at this particular point. I had a 1 pip stop loss on this one. So my entry was right here, 1 pip. This was an entry that I caught on the 10 seconds time frame. So usually when you're on the 10 seconds time frame, the 1 pip stop loss is huge, and the broker that I use, USD Swiss franc, is 0.0 in spreads. So that's where my entry was right here, you know. So my first target was this one right here for a good 1 to 10 risk to reward ratio. And if I just quickly play price, we can see the price came there perfectly, right? So the TP was hit. I actually liquidated about 80% of the volume at this particular point. Now, what was the high time frame intention? I think we already know we did that from the high time frame. So if I quickly come to M15, let me just push this one right here. We can see that our high time frame intention was to bring price to this monthly previous low right here. This one, that's the one we wanted. So I want to 123. So I actually liquidated the position at 1 to 150 risk to reward ratio. So if I just keep playing price, I mean, price just did absolutely justice right there. I mean, it kept pushing all the way to the downside. So you guys can see how all of this, the whole trade started from the high time frame, from the monthly, establishing that high time frame directional bias. That's how the lower time frame trades become high probability, because they actually are in confluence with the high time frame intention. So we can see that this right here was the goal right here. Price just completely, smacked the TP right there. This actually was one of the biggest trades, the biggest risk to reward ratio trade I've ever had. It was a 1 to 150. Of course, I didn't make 150%. I think I only made about 18% return on the whole trade, right? But I just left a little remainder because I wanted to see price actually come and follow through with that higher time frame directional bias. So if we look at the monthly time frame, we can see that this low was finally taken out right here. So the idea, I could still hold that trade, because the idea would be to see price coming all the way down to this previous low right here. And that's pretty much the high time frame intention still on USD-Swiss franc, is to see price coming all the way down, take out this low, and maintain that bearish order flow on the USD-Swiss franc. So guys, I hope I was able to make the point clear with this video. If you guys enjoyed the video, please just smash the like button for me. If you're new to the channel, make sure to subscribe, and feel free to let me know what other video that you guys want me to make. I'll make sure that happens. And guys, don't forget the 2 months membership that I just introduced. If you're willing to take these trades with me, feel free to hit the DM. Link is on the description below, and I'm gonna see you guys on the next one.